Hello everyone, and thanks for joining us today at this year's UK FinTech Week. In this panel, a story of infrastructures with an S, operational and cyber resilience in times of FinTech, we're going to discuss about the underlying infrastructure, a crucial topic when it comes to FinTech innovation. My name is Judith Perez Monasterio, Account Director at BSO, and I'm excited to be moderating this panel today. BSO is all about infrastructure. We're a global pioneering infrastructure and connectivity provider with a heritage serving the world's largest financial institutions. We currently serve more than 400 data-intensive businesses across the globe in traditional capital markets and in the crypto and digital asset trading community of institutional traders. We provide mission-critical infrastructure, network connectivity, cloud infrastructure, and low-latency cloud-to-cloud connectivity, partnering with all major cloud providers such as AWS, Alibaba, etc. Today, we have a panel of experts that represent some of the stakeholders and innovators in the FinTech infrastructure. We don't have much time, so I'm going to make the brief introduction of each of them before we start the discussion. First, Alexandra Boyle, Head of Strategic Client Group at OpenFin. Alexandra is helping to drive technology transformation with the largest global banks, asset managers, and vendors in the market. The industry's most innovative apps run on OpenFin's operating systems. Hello, Alexandra.
Hi, Judith.
Hello. So we also have Andrea Soni, Head of Solution Architecture and Transformation Executive at FinTech OS. Andrea's role sees her building and leading diverse and highly specialized teams, spearheading projects ranging from large system implementations to new technology evaluations and roadmap advice. FinTech OS, dedicated industry platforms, pre-built functionality, and low-code framework empower organizations to create truly personalized customer journeys in weeks, not in months. Hello, Andrea. How are you?
Hi, Judith. Nice to meet you.
So let's move into Ben Marrow, CEO at Briga. Ben's experience as a founder and his passion for entrepreneurship led him to co-found Briga, a founder-friendly European venture capital specialized in financing early-stage tech startups from pre-seed to Series B stage. Hello, Ben. Thanks for joining. We also have here today, apologies, Louis Liu, co-founder and CEO at Agentech. Louis co-founded Agent Technologies in 2015. Agent Technologies is a document intelligence platform that uses natural language processing to enable clients to quickly and precisely extract the data they need from their contracts and paperwork to make the running of their businesses and decision-making easier. And last but not least, Nigel Boulder, CEO at Clearbank. Nigel has over 25 years experience gained with leading global financial firms, including working on major business transformations, e-commerce initiatives, and cutting-edge financial process engineering and information technology. For those who might not know, Clearbank is the UK's first new clearing bank in more than 250 years, delivering a new level of open competition and transparency to the UK financial services marketplace. Hello, Nigel, and welcome everyone. Thanks all of you to be here today. Thank you. So let's start the discussion now. We will be covering four main topics: the state of FinTech infrastructure, how to build...
Ben. We have Ben as well. We have Ben as well.
I already covered Ben, right? Did I introduce you, Ben?
Yes, you did.
Yes. Okay. No worries.
Apologies.
So we will be covering four main topics today: the state of FinTech infrastructure, how to build a global infrastructure regulation applicable to FinTech infrastructure, cloud and resiliency, and the future of FinTech infrastructure. So without further ado, let's start with the first topic, not before mentioning that, as you have seen, all our panelists come from different backgrounds and will have different views on what is infrastructure, and that's why my S at the beginning, and in the FinTech industry. So let's start with you, Andrea. What is FinTech infrastructure for you, and what is the state of FinTech infrastructure?
So I don't normally think only about FinTech when I think about infrastructure. I think about finance world in general, and we all meet there, banking institutions and pure infrastructure companies. what is infrastructure of finance? At least for the UK, it's an interesting question, because it's one of the critical national infrastructure of the country. But you will have to try hard to find any representation of it in order to be able to understand what is made of. So I'm not avoiding your question, but I want to emphasize how important it is, and how what a huge impact it has for how our industry evolves. The fact that we are operating in the dark. So the fact that you, me, or people who are in the industry for 25 years discovered for themselves how the industry operates, it's one thing. But the fact that we cannot model anything related to the resilience of the infrastructures, the layers of these infrastructures, how they interact with each other, how they interact with other layers of infrastructure, is actually pretty dangerous. So I don't speak only about infrastructure of fintech, because I think it's very narrow, and we miss the overall view, which I think it's very important, at least from my point of view.
Okay, so thank you, Andra. Who wants to go first? Next, maybe Nigel?
Yeah, sure. I think we could probably spend 450 minutes just defining infrastructure, right? So we won't do that. But I think that so you mentioned there about ClearBank. So for me, our business, ClearBank, actually is infrastructure in its own right. So you know, so in terms of the role that we play in the industry is our partners, as we like to call them. They themselves are financial institutions, many of which are fintechs, but it's broader than just financial institutions. And fundamentally, what we do is we take some of the pain away in terms of the whole payments infrastructure. Well, within payments, we take all the pain away. So what that allows them to do is actually focus on what their core proposition is, and not actually concern themselves with this particular part. And I think, I said we won't get into infrastructure, but for me, that is the critical role that infrastructure plays. Again, not just for fintech, but I think in fintech critical. So the reason that we are seeing such a significant acceleration here at ClearBank is because all of these financial institutions need a partner to kind of process their payments. And going back into somewhere where we might go, in terms of what has historically been a bit of a monopoly in terms of the big four operating as a clearing bank, that's where kind of there is ClearBank now with this new infrastructure. So we ourselves are reliant on infrastructure, and maybe we'll come to that, into being a cloud native end-to-end app. But that's our view. We ourselves are an infrastructure play, helping our partners.
Exactly, and that's what infrastructure does. Any type of infrastructure will help our customers to concentrate into their core business, and us as infrastructure vendors in different roles. In your case, clearing services, payment services. In my case, providing low latency connectivity or connectivity between data centers or cloud connectivity. We are taking the pain away from them, and then they can concentrate in their business. Exactly, perfect. So, Luis, what is your thought on fintech infrastructure and the state of fintech infrastructure?
Sure, I think that there's been a quantum leap in a lot of different areas. Payments. Yesterday, if your money is your bus, it's about crypto. If you're reading this on a bus, you probably buy time to buy Bitcoin. There's been a lot of progress on a lot of that kind of infrastructure, right? On the retail side, on the payment side, there seems to be a neobank popping up every other second, a new payment startup happening, taking over the world like Stripe. But I think that is just the surface of the financial sort of neo infrastructure, right? in reality, if you actually look at the financial products that people buy outside of credit cards and payments, we're talking about mortgages, we're talking about loans, we're talking about in the entire space of wholesale banking around derivatives and corporate commercial paper or credit. The infrastructure there is really inadequate. I mean, if we for example, there's the Revlon situation where a city had to pay $1 billion, or the recent blow up with our Archegos or Greensill. All of those are examples of situations in which the infrastructure of a lot of our financial products are just decaying, sort of like the American highway system or the American bridges, right? And I think when we think about financial infrastructure, it's often easy to get carried away about the really good work that's happening in the crypto sphere or in the sort of retail sort of consumer finance sphere around payments. But the entirety of why we have finance, we buy and sell money, and all of the products around that has been grossly inadequate, and as well as I would say really behind, especially given the fact that data has been accumulating over the years, and we haven't really found as many tools to really tackle all this data and all the speed in which the market is moving. So I would say that there's infrastructure that we hear about that's sexy, and there's infrastructure that really govern trillions and trillions of dollars, like LIBOR transition, $400 trillion of financial products exposure that really need to be really thought through and upgraded. So that's my view on infrastructure.
Okay, well, when we cover the future of fintech infrastructure, you can give us some ideas on how do you see the future and how you see how we can tackle this problem. Okay, perfect. So now, Ben, so please let us know your view on the state of fintech infrastructure, but also what are the trends in the fintech landscape that are influencing infrastructure and pushing requirements?
Yes, sure. Look, I'm going to start with a story, and as exotic as it can
We like
sound.
stories.
Yeah, as exotic as it can sound in the current environment. I was on the plane yesterday, and I got to watch a movie that probably a bunch of you guys know about, called Butch Cassidy and the Kid, right? So Paul Newman, Redford, and the crew. And it's funny because you see these cowboys, attacking trains and attacking banks with vaults and banknotes into them, right? And you think about the way the finance world was working up until the computers, right? It was, I mean, the infrastructure was this. You had vaults, you had banknotes, you had trains, you need to carry these papers around. And it was true for payment, and it was true for assets, right? It was a proper paper-based, carry things around kind of infrastructure.
Wells Fargo.
Yeah, exactly. Wells Fargo is one of them.
We're still working.
Yeah, exactly. And that's why I think the space is so exciting at the moment. I mean, there's not that many industries that actually experience such an incredible set of revolutions. I mean, digital was a big one, and then all of a sudden, money was transferred digitally, and trading was happening digitally. So the money on one hand and the assets on the other end, all of a sudden could be traded digitally. It was crazy, right? You're like, wow, that's incredible. And these days, I mean, with COVID and the new tech, it's been accelerating. So you're like, well, banknotes are, my kids probably going to look at this in the museums and be like, oh, wow, that really existed? Really? Like, do you guys really pay with this? I mean, Sweden has just announced they would get rid of banknotes. I mean, it's crazy. If you really think about it, it's a change. It's a dramatic change, right? And crypto is a tip of the iceberg. I think, the way you actually can embrace both payment, and a lot of countries, I mean, 60 of them, I think, have announced experiences around crypto currency, and assets on the other end. That's pretty much as big as paper. That's the convergence of finance altogether, right? On paper, you used to have your titles and your banknotes. Now on crypto, you pretty much can have everything you need from payment and currency, and every state is looking at it. I mean, the UK bank has announced as well a project on that, and titles and assets and liabilities and smart contracts and everything you need to make the finance world work. So I think we're living in a crazy moment in the cycle of finance, and the way it's going to be dramatically changed by these new pieces of technology. Obviously, it's not great yet, and there's a lot of debate around Bitcoin and its impact on the planet. I mean, it's just the beginning of the technology. I mean, it's like looking at France back in the 80s with the Minitel. I mean, the Minitel was a crap version of the internet, but it worked, right? It was the beginning of how can you make people do things. So, I mean, Bitcoin is probably like the Minitel. It's probably the early days of this revolution, but who cares? I mean, if you sort of look at it on the longer run, I think, we're really experiencing the beginning of a big trend. And that's what is really exciting, I think, for everyone who's, either a tip or a foot or a leg into the water of FinTech.
Exactly. You're right. We are many different players, and we all have something to do and some responsibility to make things right. So thanks a lot, Ben. Alexandra, from talking to with BSO customers when they are building their infrastructure, their key concern is security and speed. So what are your thoughts in the state of FinTech infrastructure, and more in detail, how important is speed and security in a long-term infrastructure strategy?
Yeah, absolutely. So I will wave the global markets FinTech flag today and kind of speak from this perspective, because I know in the map of FinTech, I think we all represent different regions. So I'll kind of put my global markets hat on here. For a quick background, OpenFin, we're a software provider, backed by strategic investment with Barclays and JP Morgan, HSBC, Standard Chartered, Wells Fargo, and others. And really, OpenFin is used as a foundational layer for applications to run in global markets, and really now outside of global markets into the broader financial services sphere. But our tech powers thousands of applications in the front office, and these apps are trading platforms, risk systems, order management systems. They're market data terminals. I'm sure they're very similar applications to what your clients are building as well, Judith.
Yeah.
And so OpenFin is really the environment that these front ends run on top of, because it needs to be secure. They need to be easily deployed and upgraded. They need to provide a differentiated experience on the desktop, and they need to be integrated from a workflow standpoint, right? So interoperability between all of these systems as more and more come to the market. So where I sit is really kind of front end infrastructure, if you will. So that's kind of how I'm positioning, especially for today's session.
Yeah.
And we're kind of a digital environment. So the trend that we're seeing, I think, to everyone's point, there's starting to be this introduction from the consumer tech world being brought into the global market sphere. And that adoption is getting faster and faster of new technologies, cloud native options that just weren't, it wasn't a viable option, a couple of years ago. And I think a big shift from the traditional infrastructure that we've seen in global markets, where a bank may, build a platform strategy, maybe build everything from the ground up, or build a monolithic kind of all-in-one, one-size-fits-all platform. Now we see a much more modular approach to application architectures and desktop architecture. So building specialized applications, bringing together best-of-breed components, almost like the benefits you get from microservices on the back end, bringing that to the UI layer. And instead of a one-size-fits-all platform strategy, you're giving a much more customized, upgraded user experience and with integrated workflows. So that's the paradigm shift from an infrastructure standpoint. Traditionally, what we're seeing is the ability to push releases to production much faster, because you have a modular kind of iterative option rather than a big coordinated release. Being able to evaluate new technology, so new infrastructure providers, new cloud native data distribution platforms, new warehouses, new connectivity providers. The time, Now you can actually evaluate them and bring them into your tech strategy. Whereas in the monolith world, it was very hard to crack. So I think the speed at which more of these more of the innovative platforms can get onboarded, I think that's going to be faster. And it's all about this flexibility going forward.
Okay, perfect. Understood. Thanks a lot, Alexandra. So yeah, thanks everyone for your view on what is infrastructure, what is fintech infrastructure. And now let's move into the next topic, which is how to build a global infrastructure. We will touch upon regulation as well in this part, because many of us operate in local jurisdictions where we have our client base or our original client base. And when we start to grow and become global, how do we adapt the infrastructure? And also, what is the regulation applicable to fintech infrastructure and how this affects us? Also, are the regulatory changes being considered in a global scale? Andra, do you want to start the game? I always think about you.
Yeah, no, yeah, I don't have so much a global view from this point of view, and I'm more UK focused, let's say. Okay. This is where I'm based, and this is the market I'm familiar with. So again, when we think about over-encompassing regulation, which would go much further, in my view, we always think about payments somewhere or transfer of money one way or another. However, after spending I don't know how many years as an architect in banking in London and running innovation labs, trying to do all sorts of interesting things, at some point I asked myself, okay, where are the people and how they do things? And I realized that this infrastructure of ours, it's one thing that it exists, but in a similar way, if a pipe goes through the front of your house, but it doesn't reach your house, basically you don't have that utility. So we have a lot of those type of pipes that cross in front of people's houses, but they actually don't reach people. How I developed, let's say, a quantitative view of that. At some point, I said, okay, we don't think well in banking. We have we recycle the same thinking, and I started to do research at the University of Warwick in urban science, and I said, I want to learn how cities manage infrastructure of other types of water, transportation. How do you learn what you have? How do you know when to repair? How do you know when to extend? And there is a discipline about that and thinking about that, and it's very different from our usually very inward way of thinking. We are based in an institution and we think about that institution and that place, but actually infrastructure is always a network which connects, as you said, globally somewhere. So yeah, we change something here, we do some regulation here, but actually it has an impact overall. The point is that for all of us, it's very difficult to see that infrastructure. By definition, any type of infrastructure is more difficult to see than normal things, because it lives at a different time scale. It lives at historical time. It existed when we were born. Very often it existed, or it will exist when we die. We are lucky now that we live in a period when there is a disruption in the infrastructure of finance, and we get to see what is made of, simply because it breaks. So as Luis mentioned earlier, the Revlon case, it leaves you speechless that this is something like this happens nowadays, and so many other things. So regulation, it's interesting, but I think we have to look at it more holistically and see how others look at the breakdowns. There are cases where studied extensively how the electric grid connects with the telecom industry. We never looked how the electric grid connects with our banking, and it could go down very fast, and things like that. I am all for borrowing from other industries, ways of thinking which would enable us to regulate properly infrastructures, not institutions.
Okay.
Yeah.
Well, I understand your point. Like in my case, BSO, we provide connectivity, for example, and we can provide KMZ. We can provide an exact latency from one data center to another data center. So for us, in our case, it is very easy to trace that because it's like the electricity network, you know, like we provide fiber, so we can trace exactly. But I understand that in other infrastructures, in other services, it's much more difficult to do. Okay, good. So again, let's continue with Nigel. I think I'm picking up a trend here.
I guess just a conscious of time, so maybe just a few minutes. So I've spent. You were very polite in your intro. You said I've been in financial services for 25. It's like 33 now, so I'm really old, right? And the vast majority of those have been in working in technology within the large investment banks, where you built your applications and you kind of threw them over the wall to the organization that was running the infrastructure. And so the way that technology is kind of built, and this still persists today, is those organizations are so huge, it's very rare for you to own the entire stack, right? You just build your software and then someone else runs it. And you've actually got very little idea of what infrastructure is out there. And I think my 2.5 years at Clearbank, that's what's been the most dramatic shift. Is a lot of people think if you're cloud enabled that you're kind of just outsourcing all of your infrastructure. It just couldn't be further from the truth. You actually have, if you do it right, you should be driving much greater accountability and ownership of the entire stack because you're in control of it. So one of the things that we've invested massively in is what we call infrastructure as code. And like, what am I talking about? Well, what I'm talking about is, as well as you writing your application, you actually write the ability for you to build your technical infrastructure from scratch from a script, right? And you think, well, why would you do that? Well, fundamentally, if you're running a business where operational resiliency is absolute paramount, well, you got to be ready for a particular area of the infrastructure to go down. And so what you need is the ability to run that script to kick in a complete build of your infrastructure from scratch. And actually that whole concept of, doing these things repeatedly, actually in the old school is kind of risky. Actually, in the new school of thought, it's far less risky because you're building it kind of every day. And so the concept that we can delete our developers' environments overnight and save money and build them back up again kind of when we come in, that just doesn't exist. So in terms of us, the global nature of this is really interesting because resiliency was right at the heart of our design of our cloud infrastructure, which is an Azure infrastructure. We work very closely with Microsoft, but we've got the accountability for it. And we work very closely with Microsoft to make sure we're deploying the latest, what they call kind of zonal resiliency. So again, going back to my old time, I'm used to kind of throwing the app over the wall. And the good banks would kind of have a data center and a backup data center. Actually, we think completely differently now. We've got active of processing taking place across different regions. And, Microsoft probably won't like me saying this, but one of their entire regions went down last September, like an entire region. It took out components of the NHS, etc. Because we'd invested in resiliency and we had concurrency. Our processing just switched to the other two regions without our customers actually even notice it. Now that thing doesn't happen by chance, but then the ability for us to, let's say, take Clearbank UK and go to Clearbank Europe, we take our infrastructure as code, and literally it's just as simple as running the script, create it in the environment. Let's say it might be an Amsterdam environment or a North Europe environment, and kick in the infrastructure. So I think the lesson I've learned in my 2.5 years, what's so different from the traditional way is you've really got to treat infrastructure with the same degree of respect that you do with that kind of, maybe that little kind of sexy app that you're writing at the tip of the iceberg.
Okay, so basically for you, resiliency and copy paste method is what brings you success, basically.
Absolutely.
Okay, good. Perfect. So now, Luis, you want to go next?
Yeah, it's really interesting that we're talking about sort of infrastructure and regulation and the speed at which things change. I think most of you have mentioned that. I actually want to highlight one thing, which is LIBOR. I know people are all sick about talking about LIBOR, but it's super interesting case study, right? My wife's from Kansas, and you know, every time we go to Kansas, I didn't realize what does this world in Kansas relate to the hustle bustle of the city of London. What's super interesting is that you know the fact that the farmer with the tractor mortgage is linked, you know, his or her, you know, sort of mortgage linked to LIBOR, linked to some regulation that's happened in the FCA, you know, linked to some sort of, you know, derivative product, SOFR, whatever. That shows the deep interconnectivity. And to Andre's point before, we didn't even know this stuff existed. Right. And I think when we're seeing the painfulness of the LIBOR transition, it's painful for everyone, unless you use IGET. I'm joking. The painfulness of the LIBOR transition just really exposes how regulation doesn't always make infrastructure easier, but sometimes it actually gives a push to really expose all the interconnectedness of the infrastructure. And you know, just something that we've noticed that was shocking, right? Is I mentioned before, there's a lot of new fintech in the retail space. So we transform documents into data, right? So in the world of LIBOR transition, we'll take a loan document and we ask, you know, is majority borrower's consent required? Do you need to renegotiate his contract, et cetera, et cetera? We were so focused on the derivatives, the ISDAs, the LSTA, syndicated loans. We didn't realize when clients came to us and said, Louis, we need to review our mortgages. And I thought, well, actually, surely your mortgages, you have an infrastructure data system where these are super templated products. They are all identical. But actually in America, as you may know, these mortgages get refinanced, renegotiated. So even as something as simple as a individual household mortgage needed to be reviewed, and that even, you know, some regulation here happening in London impacts the tractor lease or the mortgage of a guy in Kansas. I think this really exposes to me, I think, as I said before, Judith, the fragility of our infrastructure today, especially when it comes to the products, the very specific financial products that we all offer as a financial services ecosystem. And I mean, the various solutions for this, I'm not sure we're here to talk about it, but I think that's a really, really important point to point out.
Okay, Luis, very interesting the way you position it as a story. So back to story. Ben, do you have any story to tell us now? Unfortunately, we're running out of time, so I think I'm going to go directly to what do you think about the future of fintech infrastructure?
Cool, thanks. Yeah, no worries. Look, maybe to the Robert Redford and Paul Newman story, I think, you know, trains is a good example where people got it wrong, right? At some point in the world, you know, rails didn't have the same width, and then you couldn't have a train to go from one border to another, from one state to the other one, right? So I think people learn from their mistakes, and when the regulator isn't, you know, pushing you into a corner, I think you have all the advantages of the world to build a global infrastructure, and that's where everyone in the fintech world is heading to, right? Everyone is now conscious that there is a big world out there, and then yes, you have as a company to be local and think locally when it comes to adapting your product, your end sort of product to users. But overall, if you can rationalize, if you can optimize, if you can scale on a much bigger, you know, size, I think it makes sense. It makes sense for your business and makes sense for everyone. That's why, you know, credit cards have tried to be global infrastructures and they've tried to maintain that duopoly or a few players monopoly for years, because obviously, you know, you can carry your MasterCard or Visa pretty much everywhere in the world. Like, you know, there's just a few countries. Even in Cuba, I think, you know, 15 years ago, you could use a MasterCard, right? So you're like, wow, that's pretty big. So this is crucial. And so I think the lesson got learned. I think everyone understood that, global infrastructure is the way to go. We talked about, blockchain, which is probably one of them. It's not the only one, and obviously there's going to be on new pieces of tech in the future, but global is the way to go. I think people have to, entrepreneurs in the tech space, and even more so in the fintech space, have to think about infrastructure for sure, but services on top. I think there's a big risk, especially with regulation, where the infrastructure becomes a commodity. And you talked about, Andrea, about utility and pipes. I think the telcos learned a hard lesson, right? They had to invest into the pipes, and then the Netflix and the Google of this world make the money out of it, right? Because they're on top of that. So I think it's a good point of reflection for everyone in that space. Is yes, we need infrastructure. Yes, we need it global to big and scalable companies. But at the same time, services and value add on top of that is going to be crucial. Otherwise, you're going to end up like any utility company and just providing the pipes, and that's not the best place to be in the value chain.
Okay, good, understood. Sorry, but we are really running out of time now here. So, Alexandra, what are your thoughts in the future?
Yeah, no, I agree with Ben. I think services on top of all of the innovation that's coming in, out of the consumer tech land are incredibly important. I think modernizing the infrastructure, specifically in global markets, is really important. And I think it's a focus on the end user and improving that digital experience of end users that we really get to appreciate in our consumer world. Things just work on your phone, apps on your phone talk to each other. There's this experience that you have as a consumer that needs to be brought to financial services. So that's going to be around digital tools. It's going to be around making users more productive, and really having an environment that can transition from the office to home to laptops to mobile, making sure data is accessible, actionable, and relevant. So our position around infrastructure is use the latest and greatest, run as fast as you possibly can, build services and do the Netflix thing, right? Make specialized, hyper-personalized experiences for your end user, and you'll be successful.
Perfect. Thank you, Alexandra. And well, thank you, everyone. It's been super interesting conversation. And I think that everyone that was listening, I hope that they took something away from it. Definitely resiliency, copy paste, as Nigel said, is the future. And I think that's where we all find our success, and our customers will find success. Thank you, everyone, for being here today.